Much, Devon. As you can see, the CEO is here with me. Let's find out more about the state of Nedbank. Welcome, sir.
Good afternoon.
I want to address rumours first. Now, normally we get told, well, we don't comment on rumours, but you've done pretty well since you've started at Nedbank, taken over as CEO. You've done quite well for the parent Old Mutual. And now these ugly rumours are coming again that Nedbank might be up for sale. Where do you think that comes from?
So I think firstly, Nedbank has had a great run over the last 5 years, and that's really due to the fact that we've got a great team of executives who run the business, and it's my privilege to lead them. We have done well. We've done well for all of our stakeholders, not just Old Mutual. They're an important stakeholder in our lives. And I think certainly we haven't heard any of these rumours that you're reflecting on. So really, I don't think there's any substance behind them.
Infrastructure in South Africa, it's a major story. I want to know what Nedbank's involvement in that is.
Yeah, so we certainly know that infrastructure is a very important element of South Africa's future growth story. Through Nedbank Capital, our investment bank, we have a dedicated infrastructure unit. So we've provided finance to many of the infrastructure projects in South Africa, including finance to some of the state-owned entities who themselves are investing in infrastructure projects. Probably the most publicly well-known of those would be the very successful renewable energy process that's rolled out in South Africa over the last couple of years. Yeah. Given Nedbank's green credentials, you shouldn't be surprised that we have done well, or our clients have done well in these renewable energy tenders. And as we sit here today, we've probably won somewhere around about 17 billion rand of new business. So these are loans that we're making to our clients who have been successful in the renewable energy process. And we've probably only paid out about 3 or 4 billion of that.
What about your consumer base? You started quite a while ago. I think it's a bit more than 2 years ago that you've tightened up, and that's paying dividends now. We've seen bad debts come down quite significantly. Are we close to reversing that cycle again?
Yes, I think the way that we've thought about our business over the last few years is we know that the consumers in South Africa are highly indebted. Yeah. And it seems to us that with rising inflation and the weaker rand, that we are on an upward trajectory for interest rates. So as a result of that, we have been more cautious on certain categories of lending in retail. So in particular, you've seen us shrink our personal loans business both last year and another 16% in the first half of this year. We've also been more cautious around home loans, where we've really focused on our own origination channels as opposed to the mortgage originators. Mm-hmm. So you're quite right. That has led to a slowdown in asset growth in retail. However, we've accelerated on the wholesale side of our business with these infrastructure projects that we spoke about. So overall asset growth is still growing at around 10%. It's really just the underlying mix that we've shifted more in favor of wholesale than retail.
Lastly, your business banking division. How are your business customers doing, particularly SABCs?
So we would think that the overall economy this year is only likely to grow at about 1.8%, mm-hmm. and there's probably some downside risk to that, given the recent labour activity that we've seen. And it would be our assessment that the SME environment is really the area of almost most pain in the current economic landscape. You've got large corporates who generally have larger capital bases, and they, when times get tight, they start squeezing their suppliers, who are many of the smaller businesses. Yeah. There's also a large increase in, let's call it, administered prices, either in the price of labor or the price of electricity or rates. So we're very definitely seeing pressure in that SME environment, and it's a very, very tough place for our customers right now.
Okay, unfortunately we're out of time. I would have liked to ask you some more about that, but thanks for yours.
Thank you.